P, and today I'm going to be talking about CLM, which we've covered a lot on this channel many times. I recently saw a video from a gentleman who basically had described that CLM was the reason that he could live financially free. And I kind of wanted to debate it a bit, just because it was something that I promoted before. Again, I'm not a financial advisor, so do your own research. I'm just simply showing you what my holdings are inside of this fund. But without any further ado, let's get to it. So you might be asking, okay, this fund has fell a lot as you've been following on the channel. Why should I even look at it? Well, first of all, it fell about 25%, or maybe around 20%. But it creates a unique buying opportunity for those of us that got in at a earlier time at around the $8.50 mark. But the benefit of this fund, which many people have been kind of uneducated about, is basically that when you reinvest the dividends, it drips at the net asset value, which essentially means that the price that is actually what the fund costs on the market is what you would buy in at, but every single dividend that you get is essentially reinvested at a lower price than the actual market price. Now, the Morningstar rating is about 4 out of 5 stars, which I find interesting because it claims that the fund outperforms the index, stating that it beats it by about 2,000 or 3,000. But the interesting thing is that this fund's almost down 50% from April of 2022, where it seemed like a better prospect. However, the distribution where many of us bought in at around $8.50 was around 16 to 17%, whereas now it's hovering around 24. And you might be asking the question of, oh, should we buy into this or should we not? And I think that wholly depends on if you're willing to see it fall further. So now if we take a look at what I'd said earlier, we see the index at about 35. This is the hypothetical growth of $10,000 at about 35,952, with CLM with drip on essentially at 37,684. And the 5-year chart, however, shows a different story where the stock price has fallen about 45% in the past 5 years, which is not a good look at all. So I would say this is a high volatility fund, but the beauty of it is that the return comes from the discrepancy between the net asset value and the market share prices I described before. So the beauty of it is that while the share price is falling, essentially you were able to basically reinvest in the fund at about a 20 to 30% discount, which is what creates that return that so hypothetically beats the index. However, the reason I think that this people should wait before getting into this fund is because, as you see here, before there was a large discrepancy between the price, which is the market price, and the net asset value. However, now we see a shrinkage of the discount to the market price between the net asset value and the price. So this creates less of an opportunity to buy, because now, whereas you were getting a 30% discount, you're only getting about 6 to 8%, which is kind of taking away from the value of what this fund is able to do, which is also something that I would keep out for. However, on a different tangent, now if we look at the distributions, we see that the distributions have been cut about like 30 to 40%. While this may be alarming and it did cause the price to fall a certain amount, it's also important to note that the reason that the distributions were dropped and where the distribution is coming from. So previously, the distribution had come from return of capital for the most part. As we see, the distribution that was payable in September 29th, was essentially mostly return of capital, and there was a very small amount of long terms and short terms capital gains. However, when we get into the distribution that's bound to be paid at the end of this month, it's all income, and we see the other two declared. They're mostly either this one's income and the other one is mostly long-term capital gains. So I think that's interesting to look at. Like, for example, previously they were just returning your own money back to you. However, now they have a different approach, which is they're actually returning you long-term gains of their actual holdings of what's in the fund. So I think it's interesting to look at this and come to your own conclusion. I've actually personally cut out of the fund, and I have basically halved what my holding value was. I sold about 50%, and I'm waiting for another buying opportunity. However, again, this is not financial advice, so you should do your own research, but that is pretty much it for this short video. People wanted an update. I got a bunch of comments, so I had to make an update of what I think about the fund. But however, if this video helped you, be sure to subscribe if you're new to the channel, and if you're not, like that video, or even if you are, like the video, and leave any comments for any more questions I can answer. But regardless, I hope you guys have a good one, and see you in the next one.